Okay, so on zones below, first time this 1985 and 3/4 to 1983 and 3/4, I expect a responsive buy back to the upside, right? Obviously, this was Globex low, was tested last night. We got a response. That was a zone from yesterday. That was a zone right below, held perfectly, almost to the tick, and then rotated back up to the top of the range, right? I expect a response at 85 and 3/4. You'll notice there's a large amount of space between 83 and 75, 8 points. This is the next strong point untested that I could find that I had a high degree of not certainty, but a high degree percentage-wise that I think we'll get responsive buys out of this location. There is a support point at 1980. Okay, it's always there. It just got chopped through last time, and I did not want to trade there. So there is a support resistance point at 1980. I don't have it on the chart. I'm trying to focus the chart specifically on where I think we have the highest odds of getting hit. That's been working very well the last couple of weeks, actually months now. I think the first time into this 1975 and 3/4, we have a great trade location. Also, if we'll look, right, we closed at 93 and 3/4. My thesis is between 20 and 30. We will get large rotations back up. That makes this 1973, which is 20 points down. Key location. These two zones, all these zones down here are all valid, but I'd like to see either tick divergence or divergence on the 5-minute swing indicator before trying to stick them to the long side. Other than that, I do expect price retracement out of each of these. I would expect a stronger reaction out of this 1975 and 3/4 first time in, and I'm probably willing to hang around a bit longer on this zone than any of these other zones, right? But again, first touch in, I expect response out. I would like tick divergence in these lower zones. I don't expect to get much past. If we get into an extreme situation, this 1962.50, 1957 area should provide nice launches back up. We just want tick divergence into these areas to get good location, right? The other thing to think about is once I'm past 1970, I do not want to really consider putting on any shorts without at least a 15-point rotation up. Why? If we're in a 30-point rotation, right, guys, the majority of the time our pattern is this, right? It's very low. We counted out yesterday, right? And I think the last 20 days, we now have 3 out of the last 22 days have closed at the low of the day. The majority of the time, you're not going to get that, and you're going to get a rebound. So the pattern that's been consistent that we've been looking for is a buildup of pressure below as people try to push to new lows. And the pattern that's been predominant that we want to look for, I'm going to show you right now. We establish a low, right? It looks like we're going to push to new lows. We make that one last push, and then we immediately close back into structure. So if we look on this particular day, right, this was where we closed back into structure, right? This is essentially below. We close back into that structure, which puts your stop, right, 1 point behind here, and that sets you for a beautiful rotation back to the upside. It also gave, if you wanted to make sure that was going to hold, right, it gave you 2 options here. If you look, we pushed up, we pushed just past the 62 retrace, right? We still held above because you're essentially your line in the sand was 2004 at that point, and it gave you a beautiful rotation back up. I'm going to give you one more example of that. Let me modify this so I don't have quite so much stuff on here. Yeah, I'm on it, JD. Thank you. Did that take care of it, JD? Okay. Okay. Let me give one more example of that. Prior day, right? We come up, we're pushing, looks like we're going to push to a low. We could notice that the key element here is it looks heavy. See how it looks like there's just no ability to rotate up? Again, push down, looks like we push into poorly auctioned territory. Looks like we are going to continue to roll to the downside. We push down, we make a new low, inability to get back above. Notice on this push down here, right? We establish structure. We push down, unable to close back above. Let me clear this chart out. Okay. Push down, unable to get back above. Push down, unable to get back above. Push down, spring right back above. See that? And back into structure. Your stop's now 1 point below the low. Okay. And that sets you up for a push back in the middle, which follows the pattern that we're looking for, which is this. Okay. So this has been a pattern, if you go look on your chart, that's been popping up for the last 4 weeks, particularly on the downside, which is also something that leads me to believe before, when we were whooshing to the downside, these consolidations were just way stations till we broke again to the lower end, and taking this trade did not work. It's a great example of how the price action has changed and kind of evolves over time. So right now, we want to look for this pattern where we get a push down, whatever the last piece of structure was, and then a push back up into structure. And when we get that, we want to start working our 50-60 retraces for pushes back to the upside. And we specifically, when you see this, you want to lay off the shorting, even though, yes, you could have shorted it back to the downside here. Clearly, the easier trade has been to the upside through here. So, to summarize, for today, I want to see, first of all, do we have open drive higher, open drive lower? There's not a significant gap down, so tick should not be an extreme. I would not expect what we had yesterday morning. Second thing, high on my list, are there counter rotations within the first 15 to 30 minutes of the day that are tradable, right? That's a judgment call. But for me, I would like to see movement up and down of 5 points. Up 5, pause, and up another 5 doesn't help me because I'm a contra trader, right? Next, if I do see those 5-point counter rotations, I want to look for my 50-60 retraces. I want to focus on first touch of the zones. I'm looking for tick divergence, and on stretches over 20 points in either direction, I'm looking for my opportunity to take a contra trade back to the upside. 10-point rotations are key in this market, guys. Really, really important. I wouldn't get scared by yesterday. Yesterday was probably a one-day anomaly, right? The last piece is, remember, we're thinking like Tom Baldwin. We want our 1 to 2 good trades a day, and we want to leave everything else alone. If you can hit your 1 to 2 trades a day, and we're coming off a period where there's been a bunch of trades all day long, right? If we get our 1 to 2 high odds trades a day, meaning on a 10-point rotation, first touch of the zone, tick divergence, and you bag that, and you can consistently build your trade size per your trade plan. Again, if you need help with that, contact me, let me know. I'm happy to work with y'all on that. You can move from one contract to really, if you build your account, 20 or 30 contracts over the course of 1 to 2 years. Okay, and now all of a sudden that 2 points a day, 3 points a day becomes significant amounts of cash. So that's what I'd like you to focus on. That's my trade plan for today. I'm going to wait out the first 30 minutes to make sure we're actually getting rotations today. And again, on zone, and I want to make sure NQ, by the way, is lined up with ES. And obviously, very tight, narrow range overnight. Economic data, let me look really quick. Econ at 9 a.m., business inventories. And one last thing, key, right? We can't get back above 1993, 1995. Obviously, that opens the door to a downside move. And I would imagine that downside move, I'm looking for longs all through from 1975 down to 1962. I'm looking for these to provide long side contra opportunities, right? Failure to be able to get above 93.50, and particularly not to be able to get back above Globex high, right? Although we're opening at 1994, so we're opening above that. We're essentially opening into Tuesday's low. So we want the ability to hold Globex low, in this case from the open, right? If I take the long from 85.75, which I almost certainly will, okay, I want to see us be able to recover and get back above Globex high relatively quickly for a push back in, probably to re-explore that 2000 to 2003 area. And one other note, look at that zone up here. This has become a chop zone, right? We know there's going to be resistance when we get up here, but it's hard to trade in this area. I have a note to myself, go easy in this area, right? It's just a chop city type of area. And if we look to the left, really below 1995, look at the chop that we get in this area. That's why there's no zone in here, okay? I do not want to trade where it just whips back and forth. Really difficult, right? I want nice clean areas to enter my trade. That's it. Any questions, guys? Tom, I don't understand the question. You're funny, yeah. Tom, if you could clarify your question, I don't understand it. But that's it, guys. Let's have a good day. 1 to 2 trades is all you need to make a fortune in this business. Don't take my word for it. Take Tom Baldwin's word for it. Okay? Increase your trade size as you nail your certainty. If you don't think you can nail your certainty, you're wrong. You can. Okay? And as soon as you recognize it's not your market, don't sit there and force it. Walk away. That's where a lot of guys run into trouble, right? You can recognize your market. Okay? I already know mine, right? We have 10 to 15 point rotations, fast pace, good rotations in the market, and I don't sit there and try to bang my head trying to force out every market. It goes in cycles. You just have to wait for the cycle to come back to you. Gonna shut up for a little bit and get ready for the open, and let's all have a great day, guys.